Hello traders, it's August 1st. I'm going to cover in this video a forecast of what to expect into the end of 2025. I've done a few videos on this topic throughout the year. I'll put the links to these videos that I've created to explain to you a little bit on how we're going to predict the end of 2025, how we should be trading, what we're looking for. I'm going to give you all this information in this video. Now, for the members at DayTradeToWin, you can find some resources on your member account. You can also get a free member account at DayTradeToWin.com. We have lots of free videos as well as the software as a trial, the roadmap, and other software available for NinjaTrader and TradingView. Now, before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So I have here a daily chart of the E-mini S&P. You can do this on the NASDAQ as well, and the Dow Jones. I like the E-mini S&P, but realistically, you can do this with other markets as well. This all begins now January of 2025. We're going to outline this idea of whether or not the first month of the year is a higher close than open. And what I have here is the first day of the year and February right here. And we could see more or less that the market moved here, closing higher than where it opened. So the first part of this equation is whether or not we have a higher close than open the first month of the year, which is January, and we did. Now this sets off a catalyst, which will be a much higher close than where we started. The idea of forecasting the year, whether or not it's going to be a bullish year, isn't new. I've taught this for about 15 to 20 years to all of our students at DayTradeToWin. What I am going to show you, though, is how we can take advantage of it, the specifics of where we enter, and the rules according to how I like to approach the risk to reward. Now, the first thing that we have is, in fact, January is a higher close than open. The second part of this is going to be identifying any type of significant pullback, at least 3 to 4 days at minimum, that we can understand, that we can relate to a pullback in the market, which will allow us to then take advantage of a return when the market wants to test where the highs have been and then even surpass it. Now, there's rules to this as well. So as I go forward here into the future, you're going to see that the market pretty much stayed sideways for some time. But eventually it began to drop and it fell significantly to a value here in April. Now at this point, what I'm looking for is a return back to test the highs. This is very important because markets love to test where they've been. So there's a tool here that we have on most charting platforms to retrace where the highest high previously has been to where we're going to look for the 50% and surpassing the 50%. Now the tool that I'm using here is a Fibonacci retracement. Now, we don't teach Fibonacci, and I don't believe in Fibonacci values. I know some traders do. So I'm going to show you how to adjust this on NinjaTrader and remove all of these values and only focus on the 50% value that I'm looking at. I'm going to double click here on the indicator, the actual drawing tool, to highlight its properties. I'm going to come here to where it says the levels, and we have 7 price levels, and I'm going to click on Edit Price Levels. I'm going to uncheck all the levels except the 0, the 100, which is the starting point and the end point, as well as the 50%, which I want to keep. So I come here to 23 and I uncheck the 23, the 38, the 61, as well as the 76.4. And I click OK. What we have here is going to be a saved version. I'm going to save it as a default, which allows me to only see the 100%, the 50, and the 0. Now, when I remove it, I just click on it and I remove it, and I again go to the shortcut, which is F8, or I come here, the drawing tool list, and I come here to the Fibonacci retracements. When I click on it, you can see that it only has the 100, the 50, and the 0. So the idea here now is as the market is going down, and it's beginning to retrace. We're waiting for it to stop and to turn around and come back up. When it does in fact cross the 50% value, has a day or two closing above the 50% marker, that's when I want to be a buyer to test where the market has been. So when I come here and I do this, we can see that the market retraced and then never came above the 50%. So we don't have that opportunity just yet. And then we continue to go lower and lower. And now you can see at this point, let me just make that a little bit stronger for you right there. At this point, we can see that the 50% value on a daily close occurred. Let me expand this out here to you. 1, 2, 3. Now this tells me that we are headed back up to test the highs. And in fact, the market went all the way to test the highs. And you can see that it went and surpassed the highs. So we have a few opportunities here as traders, not only to go long once it crosses the 50% marker, but we also have an opportunity because usually there is an acceleration, almost as if once it hits the highs and surpasses it, the stops are hit. The traders that are short are now reversing, and we have what's called a pop, and the pop happens and there's an acceleration there. One of the things that I like to use on a daily basis, even on a 1-minute chart and 5-minute chart, is the average true range, the ATR. So I'm going to add that to the chart really to give me an idea of how far, what my profit target should initially be before I begin to trail a stop. I'm going to right click on the chart. I'm going to choose indicators, and we have here the ATR, the average true range, with a setting of 4. This is what I use. I'm going to click apply, and you can see here that at this time the market was about 50 points. And so I can expect about 50 points for the market to go up as a first profit target, whether it be once it breaks the highs or once it breaks the 50% markers. Let me just change that to price. So you can see it didn't take much for the market to make the profit target here once it broke the highs. That would be the profit target. If you're looking at this here, obviously this is 425 points. We're only looking at this point at about maybe 200, maybe 100 points. So this easily was made. So we have a few opportunities. The first being once it breaks the 50% value and begins to continue and not close below the 50% value. And we also have another opportunity when the market crosses above, closes, and continues, another opportunity. Now, the reason why I'm putting out this video is because we have in the last few days a retracement, and a pretty large retracement. So remember the rule, expand this out here a little bit. The rule would be when the market retraces 3, 4, 5 days, something significant. You can see that from this high here we have 1, 2, 3, 4, 5 red days here. So according to those rules, we do have a type of retracement that we should now look at when, how, and at what price the market's going to return to test this specific high of about 6480 or 6500. And I believe that it may not be next week, it may not be within the next 2-3 weeks. We may have to go a little bit further down. But when the market does in fact turn around and stop and begin its journey back up to test those highs and move higher, we could see a significant move to the upside. It could easily reach 7,000 at the end of the year, December 2025, and that is my prediction as far as where the market's going to go. The rule for this type of trading for the year basically says we're going to close higher than when we started, because January was a higher close than open. So we have to take these opportunities throughout the year to be a buyer when it suits us. When I see the market begin to turn around and go back up above the 50% marker, that's the opportunity to buy. And once it closes above the highs, Even if you want to go long a couple of points above the high, that would be another opportunity. Double tops do occur, so that's why I recommend at least waiting for the day to close, and you can enter on the following day. But I'm more interested in that pop once we break the highs, because there's a lot of shorts here that are going to be stopped out and a lot of reversals that are going to occur. This 50% marker here is also an opportunity. Now, if you're using the Sonic system, if you're using the Atlas line or the Trade Scalper or the Roadmap or the Blueprint, these are all strategies and software that we offer at DayTradeToWin. As soon as the market begins to break the high, the 50% here above, let me just go back here, right over here. As soon as the market begins to break here, the 50% marker, this is now the opportunity where you do want to have the Trade Scalper, the Atlas line, the Blueprint, the Sonic, and only take long trades according to those rules that we have in place for that software. So even the autopilot system, you'd only take long trades as the market continues higher. So this is a great opportunity that I'm seeing setting up as we see a retracement in the market, and then I'm looking for a return back to test those highs, and that's where we are right now. If you have any questions, visit DayTradeToWin.com. Get a free member account. We have some free videos, some free software available for the traders that want to dip their toes into this world of trading. Provide us your TradingView username or your NinjaTrader machine ID, and we'll set you up with a trial. Until next time, good trading. Want to learn more? Visit DayTradeToWin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Let's get you set up in the next training.